Thanks for clicking! The Toronto Regional Real Estate Board has just released Toronto's real estate data for the month of June, showing a market that is slowing down rapidly, with the Toronto Star noting that real estate sales had crashed.
I forecasted this once.
And, while, judging from the pre-rate cut media, we should have expected Toronto's real estate market to go to the moon on June 6th, that was not the case, with sales at their lowest point for the month of June for the past 10 years.
What I do is just
And this will no doubt come as a surprise to the Toronto Real Estate Board, as it's been predicting an upsurge in buyer activity once the bank finally cuts rates, ever since the Bank of Canada hiked rates back in July of 2023. Seriously, every single month since August of 2023.
Oh, why can't you ever just trust me?
Regardless, as we'll see today, the weak sales data now has the board predicting that things could take a little longer. So what I want to do today is go over Toronto's real estate data for the month of June, comparing it with June's of previous years, go over the predictions being made by the Toronto Real Estate Board, and then discuss some implications. Canada's inflation data is due out in 2 weeks, and the Bank of Canada's next rate cut announcement is due out the week after, and we'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First up, the benchmark price. The benchmark price, if you'll remember, that's the price of a home that represents the most popular set of features, and the benchmark fell in June. The benchmark in May was sitting at $1,117,400, and that dropped about $7,000 to $1,110,600 in June. So that's a $7,000 price drop since last month, but a $60,000 price drop since this point in time last year. And the average price also dropped as well. In May, the average price was $1,165,700, and that dropped about $3,000 to $1,162,167. So that's about a $3,000 drop since last month, but a $20,000 drop since this point in time in 2023. And the median price dropped as well. The median price, that's where half as many homes are sold over that price and half as many are sold under that price. The median price in May was $992,000, and that dropped $2,000 to $909,000 in June. So that's a $2,000 drop last month, but again, another $20,000 drop since this point in time last year.
You're gonna be so very beyond sorry.
And the price drops make more sense when we look at the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for Toronto to completely run out of homes for sale. The MOI in May was 2.8, and that bumped up to 3 months in June. And, as we'll see in a minute, with so much inventory on the market relative to that of demand, homes are no longer selling for over asking price. If we look at the sales to list price ratio, which measures how much over or under asking a home sells, so if a home is listed for $100,000 and sells for $105,000, the SLPR would be 105. Toronto's SLPR in May was 102, and as of June is now sitting at 100. And they're probably actually selling for less than that, but we are still seeing some, at least reports of bidding wars, where agents purposefully list the home for well below market price, hoping to entice a bidding war, which, through the law of averages, will obviously skew the sales to list price ratio.
Oh, why can't you ever...
So, we have the benchmark price down $7,000, the average price down $3,000, the median price down $2,000. We have relative more inventory sitting on the market, and homes are no longer selling for over asking, as skewed as that statistic is. But the real news are the sales numbers, with sales down 16.4% from this point in time last June. In fact, as mentioned earlier, that's the lowest number of sales that Toronto has seen in June for the past 10 years.
everything changes.
And although sales are down, new listings are way up 12.3% since last June. And that's the highest amount of new listings that Toronto has seen in June since 2017. And with Toronto constantly seeing far more new listings come to the market than it has been seeing sales, that's led to a major increase in active listings, bringing the total number of listings available on the Toronto market to 23,613. That's the highest number of active listings that Toronto's had for the past 10 years. That means that buyers, armed with that much anticipated rate cut from the Bank of Canada, had more choice this June than they've had for the past decade. and they still didn't come to the table.
I don't understand. It was such a drastic change.
And with so many new listings coming to the market and not a lot of sales to speak of, Toronto is becoming very close to being considered a buyer's market, with its sales to new listings ratio sitting at 40.3, with the Bank of Canada saying that anything under 40 is indicative of a buyer's market. Meaning, for Toronto buyers who are in the market, you have more power than you would have had for the past 10 Junes. Meaning, finance conditions, appraisal conditions, under-ask offers, you can protect your financial interests.
Oh, just shut up.
So, as it turns out, the Toronto real estate market did not take off the minute the Bank of Canada cut rates. But what about going forward? For its part, the TREB was a bit more realistic than we're used to. Jennifer Pierce, its president, noted that home buyers will require multiple cuts before sales numbers jump back up. And yeah, that could in fact be the case. One rate cut may not have been enough to entice buyers back into the market. Or it could also be that the rate cut didn't really change anything, as the Bank of Canada's cuts do not affect fixed rates. And as such, some fixed mortgage rates are actually up. And again, that's because fixed mortgage rates are controlled by the bond market. As such, the TREB says that its polling suggests that buyers will need to see 100 basis points of cumulative rate cuts before they feel comfortable jumping back into the market.
And that's 2 weeks from now.
And although I find it good practice not to trust any of these polls, especially with how wrong they've been over the past few months, I think this is definitely a good point. Buyers are waiting this out. The last time Toronto had this much inventory sitting on the market, well, I'm not sure when the last time was. I've only compiled about 10 years of data. But the last time that Toronto was even close to having this much inventory on hand was back in June of 2018, when active listings were sitting about 3,000 less than they were right now, and the benchmark price was sitting at $798K. By the end of the year, prices had continued to drop, and the benchmark price was sitting at $764K in December. So, prices hadn't really gone anywhere with that much inventory sitting on the market. Now, granted, back in 2018, we were also in a rising interest rate environment, so there might have been some hesitancy to buy, but even back then, sales were still 30% higher than they are right now. So, as we saw in 2018, with that much inventory sitting on the market, all things being equal, unless we see a massive flood of buyers into the Toronto market, it could take a while for things to go back to normal. Maybe not normal, but it could take a while for the market to re-tighten before the choices of home buyers start to dwindle again. So, prices are down all across the board, down marginally, but down nonetheless. We didn't see a major flood of buyers heading into the market following the Bank of Canada's rate cut, despite all of the predictions that we've heard for at least the past year. As we talked about before on this channel, I think buyers are going to wait until 2025 before they start buying en masse again. And even that's going to depend heavily on the economy. With that said, we've only had 1 month since the Bank of Canada cut rates, and interest costs, borrowing costs haven't really changed all that. In fact, they've gotten worse if you're taking a fixed rate. We are eagerly awaiting the decision from the Bank of Canada at the end of July, and we'll obviously have an update out on that decision on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.